Hey everyone, today is day 2 of waiting to see who's going to be the next president of the United States. This appears to be the most decisive election we've ever had in the history of our great country. And as of now, last time I looked, the decision hasn't been made. The last votes are still being counted. Hi, I'm Reid Schwartz. I'm a real estate broker with the Craig McKenzie team at Keller Williams. And today, the question I will attempt to answer is, how is this election going to affect our local real estate market? In the short term, I don't think it's going to make a big difference in the immediate future of our real estate market. Our real estate market is really driven by 3 things: the local economy, the housing inventory, and interest rates. Our local economy is still doing quite well in spite of COVID. I mean, there's people who have lost their jobs, and we need to continue to support our small businesses to keep them there and keep them functional and physically sound. But the majority of our economy is based on the U.S. Navy here, between the active duty and civilian employees, contractors. That's the basis of it. So those jobs are still getting paychecks, and a lot of retirees here, they're still getting paychecks. So that's keeping our economy moving along. The other thing is then housing inventory. Our housing inventory has been shrinking since, let's see here. Since the Great Recession of 2008. And as you can see, our 10 years ago, going back to 2010, on the far left of this chart, at the peak, there were 839 homes for sale. That is a lot of homes for sale. But you can see every year as we've gone down, on the far right is 2020. And in October of 2020, there were only 125 homes for sale on all of Whidbey Island. That's only 15% of the number of homes that were for sale just 10 years ago. So that is pretty significant. And then the third factor is interest rates. Interest rates make a huge factor in what people can afford to buy. And whether you're a buyer or a seller, they make a big difference. The Fed has been buying mortgage bonds and keeping interest rates low. So currently interest rates are at a record. The national average for a 30-year mortgage is about 2.8%. But we are seeing some lenders as low as 2.25 on 15-year mortgages. So with the election, what should we expect to happen to mortgage interest rates? Well, my crystal ball fell off my desk a few weeks ago and broke, so I'm really not so sure what's going to happen. But the best thing we can do is go back and look at what's happened in the past. Before we do that, I want to quickly talk about what's the purchasing power. How do these mortgages affect our purchasing power? So this chart here is showing the median sales price in Island County. Median sales price in October for Island County was $429,000. So at that price, when you go to your lender and get pre-qualified for a loan, you're going to go in, they're going to say, okay, $429,000 at 2.8%. And they come up with, and so the bank qualifies you to buy the median family home. That means they're saying you're eligible to make a payment on a $2,291 a month payment. And that number's not exact, because this calculator is adding in some property tax numbers that don't fit with our local numbers. This is bankrate.com. That's why I always encourage you to talk to a local lender and get accurate numbers that affect what we're doing right here. But for the argument's sake, so the bank's going to qualify you for $2,291. So if interest rates went up 1%, then to 3.8%, your purchasing power is now dropped down to $386,500 to be able to, with that same monthly payment. So that is significant. looking today on November 5th, this is the MLS looking at every home for sale in on Whidbey Island, priced under $429,000, and there are a total of 23 properties for sale. Now, if we lower that price point down to that, if interest rates went up to that factor, to $386,000, that drops us down to only 19 properties for sale. So that's a huge limiting factor. So getting back to interest rates and how the elections are going to have affected interest rates in the past. So in 2016, after the election, interest rates shot up by about a half a percentage point within 90 days. There was a stock rally after Trump won the election. Stock rally caused a sell-off of the bond market, which caused interest rates to jump even higher. If Trump wins this time around, it's unlikely the stocks would rally significantly because stocks are already at an all-time record high. In 2012, there was virtually no change in interest rates. After the election, it was likely due to the fact that the incumbent Obama won the election, meaning that there really wasn't any significant policy change anticipated. Then in 2008, there was a decline of about 1%. This was primarily triggered by the Fed's massive bond buying program that kicked off in late 2008. This was the first time the Fed began buying mortgage bonds, which they've continued to do to this day. In 2004, there was no significant change. After the election, likely due again because the incumbent Bush won the election, and once again, the market wasn't expecting any significant changes in policy. In 2000, we saw a decline in interest rates of about 0.5% over 90 days, and this was because the election was contested, which caused stocks to falter, and due to the uncertainty, investors flocked to the safety of bonds, causing interest rates to decline. So if Trump wins, the election is uncontested, and it's likely interest rates won't change much. If Biden wins, the election is uncontested, interest may decline a little bit, but interest rates are already at amazingly low rates. If the election is contested, then we could see a sell-off, and that could cause interest rates to actually drop a little bit lower, although interest rates are awfully low now, so the odds of them actually going much lower doesn't seem all that likely, but I suppose it's possible. So that concludes my answer to the question, and I don't know if that's a great answer, but basically we don't know. But there's we can look at what the history tells us and look at what happens coming forward. I anticipate interest rates probably will stay about where they are, but we got to be prepared because if we start seeing inflation, the Fed could raise interest rates to curb inflation, which, as I showed earlier, could have a huge effect on real estate sales, both from the buyer's point and the seller's perspective. So I'm Reid Schwartz with the Craig McKenzie team, and everybody have a fabulous day.